Welcome back to the Deep Dive. This is Talk Tickers, and we're here to break down the conversations and the numbers that really move the needle. Today, we're jumping into the Q3 2025 earnings call for a really key player in the space launch and systems market. This call just dropped post-market, November 10th.
That's right. And the market reaction, well, it's pretty immediate, wasn't it? A big jump after hours tells you management delivered something the street liked. So our job today really is to sift through, the hours of call transcript, pinpoint the beats, figure out what that huge cash pile means for their strategy, especially M&A, and get the latest on the Neutron roadmap.
Okay, let's dive right in. The results snapshot, the immediate headlines, they definitely accelerated things this quarter. Top-line revenue, $155.1 million. That clearly beat the consensus, which was sitting around, $151.8 million?
Yeah, just under $152 million, so a solid beat.
No.
And that's a 48% growth year over year. Pretty strong.
And critically, that growth actually flowed down. The EPS number, the GAAP loss per share, came in way better than expected, negative 0.03 cents.
Right, when the street was braced for negative 0.10 cents. That's a huge difference. Shows they're managing costs better as they scale up. Almost 70% less loss than anticipated.
But the number that really got people talking, I think, was the margin. Record GAAP gross margin, they said. 37%.
Mm-hmm. And management's messaging really hammered this home. You heard things like momentum is strong, poised for long-term exciting growth. They're clearly feeling confident about scaling and getting more profitable.
That margin, it's probably the clearest sign yet that the Electron launch business is maturing, becoming more efficient.
Definitely. But, there's a bigger strategic story here, too, tied to that cash position you mentioned earlier.
Absolutely. Let's get into the financial health, because this is, it's the fuel for everything else, isn't it? They ended the quarter with just massive liquidity. Over $1 billion.
$1 billion, yeah. And how they got there is interesting. A big chunk came from that ATM program, the at-the-market equity offering.
Right. $468.8 million generated just in Q3 from selling stock.
Now, usually you see a company raise that much equity, the stock takes a hit, right? Dilution concerns.
Sure.
But here, it didn't really happen that way. The market seems to view this, I think, not as desperate cash, but as growth capital.
Like a war chest.
Mm-hmm.
For Neutron completion and especially for M&A, buying up capabilities.
Exactly. Growth capital. They're using it to build something bigger, vertically integrate. Yeah. That's the narrative the market seems to be buying.
Okay, so that makes sense of the capital raise. What about the costs? Revenue split was $104 million from products, $51 million from services. And even with all that R&D spending, the GAAP operating loss narrowed to $59 million. Still a loss, obviously, but smaller than before. That operating leverage starting to show?
It seems like it. The non-GAAP operating loss was even tighter, $33.2 million. But, okay, back to that 37% GAAP gross margin. We need to be a bit critical here. How sustainable is it? Were there, one-offs?
Yeah, good question. 37% is a big number. What's underneath it?
Well, management was actually pretty open about it on the call. They did point out a couple of, let's call them temporary benefits in Q3.
Okay, like what?
First, a change in how they recognize revenue for some HASTE missions. That's their work supporting U.S. hypersonic testing. It shifted to overtime recognition.
Okay, and accounting shift.
And second, and this is probably bigger, they got a 100% margin benefit from an Electron mission that got canceled. The customer's program ended, apparently.
Okay. So pure profit on that one since the work wasn't done. That definitely helps the average.
It does. So yeah, there were some tailwinds. But
if it was partly temporary, why the stock surge? And why did they guide Q4 so strongly?
Because the underlying trend, the core operational improvement, seems real. And the Q4 guidance suggests that's what's driving things going forward. They guided revenue for Q4 between $170 and $180 million. That's another step up.
And the margins.
GAAP gross margin expected to nudge up slightly, 37 to 39%. But look at the non-GAAP gross margin guide, 43 to 45%.
Wow, 43 to 45% non-GAAP.
Yeah.
That strips out things like stock comp, right? Gives a clearer picture of core profitability. Hitting 45% would be huge.
Transformational, yeah. And it flows through to EBITDA, too. Adjusted EBITDA loss guided to narrow again, just $23 to $29 million. Suggests core expenses are coming under control.
And speaking of expenses, they gave a pretty significant hint about their biggest R&D item, didn't they? Neutron.
Yes, this was key. Management said they expect to approach peak Neutron R&D spending very soon, in the near term.
Peak spending, that's a major signal. Means the heaviest investment phase for the new rocket might be almost over.
That's the implication. It suggests R&D costs should start to ease off maybe later next year, which would really help the bottom line. Though they did caution that capital expenditures, the actual spending on hardware, testing facilities, that'll stay high for a while. They need to build and test this thing.
Okay, so launch business improving, R&D peaking. Where's that $1 billion going then? Let's pivot to the strategy, the momentum. It feels like it's all pointing towards defense now.
Absolutely. They're taking that Electron efficiency, that high launch cadence, and really aiming it squarely at national security customers. Confirmed they're tracking over 20 launches this year, a new record for them. And the backlog is apparently also at a record. They signed 17 dedicated Electron contracts just in Q3.
That speed, that cadence, it's their weapon against the big traditional aerospace primes, isn't it? Especially for defense programs that need rapid deployment.
Exactly. You see it with the HASTE hypersonic work. It directly links Electron to things like Golden Dome, the SDA constellations. The Space Development Agency needs that kind of commercial speed for their strategy.
And that speed, plus the cash, fuels the M&A. That $1 billion isn't just sitting there.
No way. The GEOST acquisition was probably the biggest news on the strategic front. They closed that deal up to $325 million. And this isn't just buying revenue. GEOST brings high-end EO/IR payloads, electro-optical infrared sensors, really critical defense tech.
So they're moving up the food chain, started with launch, now adding complex payloads, offering the whole package.
Precisely. Becoming a systems integrator piece by piece.
Right.
They also mention making progress on restructuring Mynaric for a potential acquisition.
Mynaric is laser communications, right?
Yeah.
Another key tech for satellite networks.
Yeah.
And gives them a European base.
Exactly. High margin, critical component. And with that $1 billion plus in liquidity, they basically said, we are the consolidator of choice. They're actively hunting for more deals.
So you connect the dots. Vertical integration, payloads, laser comms. It all leads back to the big government programs like SDA. What's the latest there?
Crucial update. Their Transport Layer Tranche 2 satellites passed the Critical Design Review, CDR. That means that program is moving into full production. Big milestone.
Okay.
And they sounded very confident about winning SDA Tranche 3. They explicitly said it would be their largest contract ever. And having GEOST's payload capability in-house now, that strengthens their Tranche 3 bid significantly, offers a ready-made integrated solution.
That makes sense. They can offer the bus, the payload, maybe even the launch end-to-end.
Though they did mention, potential timing impacts from government funding delays. Always a factor with these big programs.
Right. The usual budget cycle uncertainty. Okay, let's talk about the elephant in the room, or maybe the rocket on the pad. Neutron, the big one. We knew the schedule was ambitious. What's the updated timeline?
Okay, so the Neutron vehicle itself is now targeted to arrive at Launch Complex 3, that's the pad, in Q1 of 2026.
Q1 26 to the pad and the first launch.
Follows successful qualification and acceptance testing after it gets to the pad. So that realistically pushes the possibility of a first flight into, I'd say, the latter half of next year, maybe late 2025 is less likely now.
A bit of a slip then. How much has Neutron cost so far?
They gave a number for that. Cumulative R&D and CapEx for Neutron is estimated to be around $360 million by the end of this year, 2025.
$360 million sunk cost so far, roughly, gives you a sense of the scale.
Yeah, and it frames that peak R&D comment. The bulk of the projected spend is likely behind them, or very nearly so.
How did they spin the schedule adjustment? Any delay in this industry can make investors nervous.
They were very direct about it, actually. Emphasized a meticulous process. Their words. They want to find and fix problems on the ground during testing, not during the first flight. The CEO basically refused to break the mold of the Rocket Lab magic, is how he put it, prioritizing reliability over rushing.
The Rocket Lab magic, huh?
Yeah. And they argued the extra labor cost from the slight delay is, quote, insignificant compared to the long-term benefit of getting Neutron right the first time. Establish that reliability from launch one.
I actually buy that argument. In spaceflight, slow is smooth and smooth is fast eventually. Rushing leads to expensive failures.
I agree. Better to be thorough now. And they gave some specifics on that testing rigor to back it up.
Oh yeah, what kind of testing?
Said the Archimedes engine testing is running practically around the clock, 20 hours a day, 7 days a week, really pushing for long duration burns to test fatigue life.
Okay, serious engine testing.
And on the structure side, they're testing the stage 1 tank sections and structures to handle 1.5 million pounds of thrust. That's a lot of force.
Yeah.
They're definitely doing the hard work on the ground.
So pulling it all together, what's the big picture takeaway for you our listener. The narrative seems to be shifting, right? It's less just about Electron launches, more about leveraging that efficiency to become this vertically integrated space company focused heavily on national security, high margin stuff.
Yeah, and the market seems to largely agree already. I mean, look at the stock performance over the last year. It's crushed the broader aerospace and defense sector. The XAR ETF is up, what, 40%? This stock is up over 250%.
Massive outperform. So the growth story was already priced in to some extent.
Seems like it. Which might explain why the post-earnings pop, while solid at 7-8%, was actually below the implied move based on options volatility, which was closer to 12%. Expectations were met, momentum confirmed, but maybe not a huge upside surprise beyond what was already baked in.
Okay, so if the market already believes, what needs to happen next? What are the catalysts we should be watching for?
It really comes down to execution now. I see four main things. One, Q4 delivery. They need to hit that raised guidance, especially on revenue and those non-GAAP margins. Prove the trajectory is real.
Right, deliver the numbers.
Two, Electron contract conversion. How quickly does that record backlog turn into actual recognized revenue? Efficiency matters.
Okay, backlog to revenue speed.
Three, defense wins. Tangible contract awards, especially ones leveraging the new GEOST payload capability. All eyes are on SDA Tranche 3. Winning that would be huge validation.
The big defense contracts, got it.
And four, Neutron hardware milestones. We need to see physical progress, getting that first vehicle structure stacked, moving it to the launch pad in Q1 next year like they targeted. Seeing is believing.
Makes sense. Execution, contracts, and hardware progress. All right, now for our favorite segment here on the deep dive, the part where we definitely say this is not financial advice. But we like to toss out a, let's say, bold trade idea based on what we heard.
Yeah, an aggressive take. So looking at everything, the billion-dollar war chest, the GEOST acquisition, making them a serious payload player overnight, that vertical integration speed. The trade idea that comes to mind is a paired trade. Go long this company and short one of the big legacy defense prime contractors. You know, the ones with slower development cycles, maybe less vertically integrated in the same way.
Okay, explain the thesis there. Long the disruptor, short the incumbent.
Pretty much. The core idea is speed and agility. This company, with its cash and its now end-to-end capability launch, satellite bus, advanced payloads like EOIR and laser comms, they might be able to scoop up contracts like SDA Tranche 3 and maybe others much faster than the traditional primes can adapt.
So you're betting the government's push for faster, cheaper, more resilient constellations favors this model.
Exactly. We're speculating again, not financial advice, that the market hasn't fully priced in how quickly defense money might rotate from the old guard to these newer, faster, vertically integrated platforms. The trade banks on a rapid shift in relative valuation as market share starts to move. It's a bet on disruption pace.
That's definitely an aggressive thesis for a changing defense landscape. Bold indeed. Okay, so to wrap things up for you today, key takeaways are a solid financial beat, confirmation of improving, even record margins though, watch for those one-offs, and really strong signals on the strategic front. M&A and defense are central.
Right. And the Neutron update, while maybe a slight timeline push, really reinforced their focus on disciplined engineering and risk reduction. Prioritizing getting it right, which long-term is probably smart. The focus now really shifts from R&D promises to just delivering. Operational execution, integrating acquisitions, winning those big contracts.
So that was our deep dive into this pivotal Q3 earnings call. Remember, all this is just for your information, help you understand the moving parts. Please do your own research before making any investment decisions.
Yeah, use these insights as a starting point for your own thinking.
We'll catch you on the next deep dive.